The Federal Reserve is going to raise interest rates either Monday or Tuesday, most likely. Probably Monday, right after this closed door meeting. Cheers. I appreciate you guys. If you're in the Discord, mute your mic. Mute your mic if you're in the Discord, if you're not chatting, so that there's no feedback. People in the YouTube thought I was talking to them while I was talking to everybody in the Discord, so my apologies. We're underway here. Again, 11:30 a.m. Monday, February 14th. But the markets are already starting to price this in. And I have a feeling that Friday, February 11th, is going to be a nasty fucking day. Cash, what the fuck happened, man? I thought everything was under control.
Emergency.
Right. And why is this important? There are a lot of contracts that expire February 28th, futures contracts, and that's 2 weeks before the March 16th FOMC interest rate hike that was to be expected. The reason for this meeting is because inflation numbers are out of control. The actual weighting of inflation numbers has changed significantly. The way that inflation numbers are calculated, it has changed as of January 1st, 2022. The amount of food that you spend on groceries, that is actually, the weight of that has been reduced on the CPI calculations in order to reduce its impact, the extremely high rise in groceries and takeout and restaurant food that we experience every single day. So because they reduced the weight of that, it does not impact the CPI numbers as much. What else did they reduce? Fuel. But I'm not spending less gas or less fuel than I was previously, at least last year. I know a lot of people aren't either. Sure, there's a lot of Teslas out there, but not a lot more is January 1st than there were on December 31st. So they've reduced the weighting that fuel has and oil has on the CPI report. And it's been a surprise. They were expecting 7.3. It came in as a surprise at 7.5. If you use the same calculations that we had in the 1990s, we would be a lot closer to a 17 to 18% CPI, as opposed to what was released, 7.5%. So markets are starting to bake this in. True inflation is huge. Switch back over here. Earlier, there was rumors about a possible Fed meeting, emergency meeting for Friday or Monday taking place. Zero Hedge wrote about it. I saw it on CNBC all over the place. If you read between the lines, you could see that they were giving us hints that the Fed was going to raise rates and that they were going to have this emergency meeting. Is it aggressive? Absolutely. Is it crazy? Absolutely not. Because we need this. We absolutely need this interest rate hike to happen as soon as possible, because we're going to need at least 6 of them at at 50 basis points apiece to go up, at least 2.5% to 3% over the year. You have to be aware that this is going to be negatively reflected on the stock market almost immediately. The futures are already down. You guys can see that pretty clearly, I'd say. But I'll pull it up for you if you haven't been checking. The Dow futures, as of right this moment, 10:41 p.m. Central Time, February 10th. The Dow futures are down 0.47, the S&P 500 0.53, and the NASDAQ 0.50. That's nothing massive. But it's definitely not looking good going into tomorrow. And institutions know what happens at these meetings. They understand that this means that the rates are going to be increased, And a lot of people like to say it's priced in, but it's not priced in. There's only 4 meetings priced in from the majority of banks. And they were under the agreement that it was going to have to be pretty aggressive at about, 0.5 or 50 basis points each time. The way it's looking and the way the Fed is pushing this off right now with this emergency meeting, there's a very high probability that they're not going to have just 4 interest rate hikes. We need a minimum of 6 or more in order to even start to combat inflation, because the Fed has been so far behind the curve this entire time. But it's been purposeful. It's been purposeful. At this point, Jerome Powell and the Biden administration, as well as the United States government, have been working to increase inflation. It's good for our government's paying back of our government's debt, even though it's bad for Americans, and it's a hidden tax on people like you and I. So the issue is here that we are in an election year, and Biden has Jay Powell by the tie. And he's about to wring his fucking neck, because I think Jay Powell let things get out of hand. What does this mean to AMC? This means this will cause another negative day on the market, most likely, if not several. It could be quite a red day. The Plunge protection team might have to step in once again to save the stock market, just like it did on January 26th, 2022, to prevent it from collapsing, as it was down 4% and then was recovered through the use of selling of $50 billion worth of puts by the New York Fed, which was handled by the Plunge protection team. So, quite simply, if the Fed hikes rates Friday or Monday, as I said earlier, at 3:20, apparently 3:20 p.m., the stock market will most likely crash. Now, this doesn't mean it's going to be a huge crash. It's going to be a little bit of a correction here to price this shit in, but it's going to be significant enough to make people some money on the stock market. And if things get out of control, it could definitely cause a widespread panic. Yeah, Yanis, I never said there was a rate hike tomorrow. I said that there's an emergency meeting for a rate hike on Monday, February 14th, 2022. So please educate yourself before you speak about the rate hike. And I only say that because this is brand new information, so please check it out. This matter is to review and determine by the Board of the Governors of the advance and discount rates to be charged by the Federal Reserve banks. I have been personally contacted by several mortgage brokers and people that work directly with big banks or in big banks, and they have told me that mortgage rates are up 0.50 basis points, 0.556 basis points actually, to be exact. So what was 3.375 30-year mortgage for someone with good credit, 720 credit score, is now going to be 3.875, an increase of over 0.5%. And that is because of this emergency meeting that happened today at the big bank, at the bank at which this mortgage broker works at, that I discussed this with today. Again, this is brand new information here. It was dated February 10th, 2022, last updated. Obviously, I thank you to whoever posted it on Twitter. I believe his name was Daniel. Thank you very much for posting it up. I'm sorry I don't have your Twitter handle available at the moment. What this means for AMC and GameStop, they're going to keep running with the market for a little bit until the market sort of bottoms out. Once the market has a proper correction, proper crash, then we'll see it. AMC and GameStop and Sundial, BBIG, Express, Cost, all of the meme stocks for the most part, Progenity, DWAC, you name it, begin to have proper runs. And when I say run, I don't mean $1.50, 10%, 15% run on one of them. I mean, 20, 50, 100%, and then possibly 1,000% percentages of runs for those meme stocks. That will have to happen because when the assets lose their value, when equities like stocks and bonds lose their value because bond yields are up and becoming inverted and being sold off, and because stocks are overvalued, and there are all sorts of Fed rate hikes that are looming right here, more so than because the Fed is more hawkish than the banks anticipated, it is going to cause a market-wide correction. I like to call it a crash because that's really what it's going to be. But it's going to take some time to get there. Just like 2008 took 2.5 months to really pan out, this is going to take some time as well. When it does, AMC and GameStop are going to go to the motherfucking moon. And I think we're going to be so goddamn fucking rich, it's going to blow your mind. But I'm not a financial advisor. I don't have a crystal ball. This is just what I feel to be personally the least risky investment I've ever made in my life. And that's fucked up because
Everything is okay.
No problem. No problem. We got this under control. We got a closed door meetings. You can't come. We'll tell you what we come up with, what kind of conclusion. But we're gonna have some arguments, and then we're gonna come in and let you know what happened after the fact. But you can't come in. We can't let any cameras in here or any recordings of this escape whatsoever. But everything's fine. Don't worry.
Emergency.
Ah, the money printer. That's a good fucking sound. God damn, we're going to be so fucking rich. Holy shit. Bond yields. 2-year and 10-year. You guys don't know, do you? The inversion of the bond yield always signals a market crash. 9 out of the last 9 times that the bond yield has inverted here in the United States, it's a market recession. It's a recession, not market crash. Market crash, yes, followed by a recession. On February 7th, 2022, Chinese stocks crashed. And the Plunge protection team of China, which is the federal government, stepped in to buy that shit up and save their stock market. This is happening worldwide. One of Bloomberg's sources, who had direct knowledge of the matter, said Tuesday's equity intervention was intended to halt stock declines. The main equity index tumbled into a bear market in mid-January after sliding most of 2021 due to regulatory crackdowns by Beijing. Bloomberg sources weren't sure the amount of securities the Plunge protection team purchased. This is the second time in just a few weeks that market interventions we have seen. Again, I reported to you guys January 26, 2022, the United States, the SPY crashed. The United States head of the Treasury, Janet Yellen, old fucking Yeller, that old bat, right along with this fucking Gary Gensler and a couple other people, are the head of the Plunge protection team, and they spent anywhere between $20 and $50 billion selling puts in order to cause a delta gamma purchasing of SPY derivatives and equities to cause delta hedging and futures buying of S&P contracts and SPY and SPX, etc. This caused a bullish volume and volume traders to jump in. Same thing that happened pretty much here in China on February 7th, I believe it was. State-owned Securities Times called upon the investment community, such as brokerage firms, fund managers, insurers, and other institutions, to stiffen the spine and support capital markets amid surging volatility. The Plunge protection team literally calls up the fucking market makers and hedge funds and brokerage firms, fund managers, to beg them for help, to fucking tell them where to put their money and how to invest it to help prop up the market in China, to prop up the stock market in America. Both of them. They're all working hand in hand to prevent you from pulling your money out of the market or going bearish, to make you a goddamn bag holder. And I've proved in other videos that they're using Chinese developer bonds hidden in ETF tranches throughout your 401ks, mutual funds, money market accounts, IRAs, ISAs, you name it. They're in there. If you don't know where exactly individual stocks, if you don't hold individual stocks, and if you don't choose them yourself. If you're choosing random, these 2025, 2035, 2045 expiration date, packages, or these ETFs or mutual funds that you don't understand why BlackRock or Vanguard or HSBC or Principal or Prudential has all these ETFs that you don't know what the fuck's in them, The top layers look pretty with, Apple and Facebook, but the bottom layers are full of garbage tranches of Chinese developer junk bonds that are going to fuck you out of your pensions. So be careful on the way you have your money invested. That I do have to say. Let's back it up here a little bit. I'm going to end it on that note. Liquidity. You know what? One more thing. If you don't know this, you do have to know. Executive order. These margin calls are what caused the January run-up and the May run-up, May and June run-up of AMC and GameStop and these other meme stocks. Plain and simple. Where the fuck is it? See right here? Authorizing transactions involving securities of Communist Chinese military companies. This was Executive Order of November 12, 2020, and it stated that on 9:30 a.m. Eastern Time, January 28th, 2021, the day AMC and GameStop ran up almost 2,000%, at 9:30 a.m. Eastern Time, any Chinese military company, security or derivative of any sort was completely worthless. This caused margin calls. This caused these brokerages like Robinhood and Webull and all sorts of other ones, I believe over a dozen, to go position close only, which meant that people weren't allowed to buy. They were only allowed to sell their stock. They went position close only for several days, and several days later, this was extended by executive order through May of 2021. And it was extended through 9:30 a.m. Eastern Daylight Time, May 27th, 2021. The same executive order. And on that date, at that very moment, all of that collateral became completely worthless. So it doesn't matter if they're Chinese developer bonds, or if they're Chinese military companies, or Russian this, or American that, or Filipino that. It doesn't matter where it's from. If you take away a big portion of collateral of assets, margin call. Lots of them. And what does that mean? We had a May run-up of AMC from $12 to $72. And GameStop ran up hundreds of dollars as well. And then this was also extended, all right? This was given they kicked it down the can again on page 30,146 of another executive order, of the amendment to an executive order. It was extended through June 3rd, 2022, 12:01 a.m. Eastern Daylight Time. So there's yet another executive order that for June 3rd, 12:01 a.m. Eastern Time, would cause all that Chinese military company collateral to become completely worthless. But if you ask me, there's no way in fucking hell that the American or the Chinese stock market can make it anywhere out of the second quarter, if even the first. I don't even think we can get out of the first quarter of 2022 without a proper market correction and crash. Whether that happens or not is yet to be seen, but it's a long road to a market crash of this because of the financial situation that we've seen, the financial issues. And if you're unaware, again, Executive Order number 14032 from June 3rd, 2021, starting on page 30,145, it has only been seen by 11,000 people in the world. Addressing the threat from securities investments that finance certain companies of the People's Republic of China. That is the entirety of Joseph R. Biden's amendment of executive orders that have caused the January run-up of GameStop and AMC, the May run-up of AMC and GameStop, and in June is going to cause it again, but we're never going to get that fucking far. The market's going to crash way before that happens. And then AMC and GameStop are going to the fucking moon anyway. And the DTC, and the SEC, as well as all our brokerages, and these market makers and hedge funds, prime brokers and banks, they're going to be begging the fucking Fed for money, for a bailout. And they're going to get it because they got $29 trillion in the 2-year period after 2008 stock market crash. So if these banks, market makers, and hedge funds got a $30 trillion bailout after 2008 and continue to get trillions of dollars in quantitative easing, meanwhile the Federal Reserve is raising interest rates, it's a fucking juggling act. It's a circus. And it's only a short matter of time before guys like Jeremy Grantham, Michael Burry, Dr. Metzler, and myself, and a lot of other people, don't mean to put myself up there with them, but a lot of people that are out there telling you what's happening in this world and in this stock market are actually, proven to be correct, not because we want to be, but because the facts are right here in front of our faces. The numbers and the details are there if you look. Let's take a look at the 2-year yield. It's been on the upward trajectory all fucking day. This is the last thing I'm going to look at today. 2-year treasuries at 1.59% and rising. Up 0.03. And the 10 years only up 0.007. Only a fraction of what the 2-year. So as you can see, the 2-year continues to get closer and closer to the 10-year. And when it becomes the higher yield than the 10, holy shit, did you see that? Yeah, it's updating as we speak. They're updating as we speak. The yields are going higher as we literally fucking talk about it right now. Because they're getting more expensive. The futures are dropping. We just saw these. They were at 0.5. Now Dow futures are down 0.65%. The S&P 500 is down 0.73%. And the NASDAQ futures down 0.78%. And the 10-year treasury just went down, or just went up. The yield went up a little higher to 2.036. Went up 0.07. Notice there's 2 zeros there. And the 2-year is up a massive 0.03 in comparison at 1.59. This is almost at 1.6, and the 10-year is at 2. It's going to be only a matter of time before this gets to be inverted, and that's an immediate recession for the country. We're already at an immediate recession. We're already in a recession. The stock market is just not reflecting it yet. I apologize if I am a little blunt about this, but they don't call me Boss Blunts only because I like to smoke blunts. On that note, I wish you all peace and wealth. We're going to be so goddamn fucking rich. It's going to blow your mind. Peace. Enjoy your VIX calls and your SPY puts. What was that, Cash? Say it again.
So goddamn rich.
Is there an emergency?
Emergency, everything's okay.
One more time, dude. One more time, motherfucker.
Emergency, everything is okay.
Everything's fine. Everything's fine. Don't worry about it, motherfucker.
Hurrah!
Holy shit, we're gonna be so fucking rich. It's gonna be great. Holy shit. Just don't dance.
Great.
Damn it, we're gonna be so fucking rich. God damn, for the motherfucking win. Thank you, everybody. I'm humbled. Thank you for your support. I hope you make a lot of money off this. I'm not a financial advisor. I wish you peace and fucking well. Listen, I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
give me the fucking money. Get the goddamn money printer out.
Great. Bounty better. Marcel.
We're gonna be so fucking rich. Oh god. Get the goddamn money printer out. Holy shit.